We are at
I love it. All right, we're getting everybody in.
We could reward people who tune in early with like winning lottery number or something coming up. Or
Do you have that? Because that would be fantastic for us to
like lucky horse in the Derby.
yeah, that like I feel like I need an inside scoop on that if you're going to tell everybody about it. I should at least have the opportunity to buy it first. All right, well, while everybody is getting in and getting logged in real quick, we're going to do some fun icebreaker things because it was really fun for us to do last week, and I think it's just kind of fun and funny while we get everybody logged in. Okay, so we're going to start this week with I am actually going to do, let's see. When was the last time you swore, like said like a really bad word, a curse word? I know, Rob, this is foreign for you, but you know, a really bad curse word. When was the last time you said a bad curse word? And then like when is it okay to do that? Jim, do you want to tell us?
I don't. I feel like the sailor over here. I don't know if it's just because I'm in Philly and it's a little more, but it was probably this morning. It was probably. It's. I feel like swearing is important for emphasis. But I know a lot of people would disagree with that. I see Amy agreeing, but for me, I would say swearing is, trying to be emphatic about something. I think curse words are really good for that, and they're fun to say. So.
All right. Femi, 4 minutes ago. I love it. Rob, do you remember the last time you swore?
um, the last time so let's talk about swearing.
Okay.
Because swearing has changed over time.
Yeah.
What used to be really bad, like really, really bad, isn't so bad anymore. And what used to be swearing, you would, because I've looked into this, and this is way off the mortgage track, but
Yep.
when you look at swearing over the centuries, when people would swear, they would oftentimes talk about, uh, oh, Satan's tendrils,
Yep.
which right now, Satan's tendrils, no big deal, right? Probably the last time I swore was uh, when probably at a TMC event when Bob Hamilton took the last Diet Coke out of the soda pop bin, and I let Bob have it. Um,
I don't believe that for
so
God.
uh,
Well,
anyway, the last time I swore, I was probably alone, and I don't know.
yeah, Faith put
Does
in there.
driving even count? Does it even count?
Driving. Oh, driving. Yeah, driving. Oh my gosh.
Yeah.
Yeah.
That's
Driving.
bad. Anyway, we should
I like
talk
how this
about,
all started from me asking what's the most inappropriate thing I can say on the podcast. So
yeah, we should
got a
fill
good
the audience
icebreaker
in
out
on
of
that
it.
because
Yeah.
this came up because Melissa said that she wanted to ask everybody what if we were a circus act, what act would we be in the circus while people were tuning in? And Jim wanted to talk about swearing. So I'm somewhere in the middle.
We pivoted on it. My G rating comment. I love it.
I like the
So
seasoning.
yeah, Chrissy says it's she sprinkles it like garlic in food.
Yeah.
Adds
Swearing
some
or
seasoning.
clown acts?
You can never have enough
Uh,
garlic too. No.
it says it's like seasoning to sentences. All right. Brian.
Oh, there
Brian,
you go. What's Melissa's favorite
what's
swear
my
word?
favorite swear word? I'm gonna go down yeah, Tony's right. It actually is fart knocker.
I was going to say Satan's tendrils, but
It's a really good alternative to the F-bomb. Um, And yeah, so for those of you that have watched, one of my favorite like Christmas movies is called Spirited. And it's Ryan Reynolds and Will Ferrell, and it is just absolutely hilarious. But to Rob's point, where he was talking about kind of how swear words have shaped, like, or have changed over time. One of the things that Will Ferrell does in that movie is he explains what good afternoon means. And so, yep, exactly, Jen. Yep, it is. He goes through this whole thing where he's like, good afternoon, and that's like the F-bomb of his time. And so now we say that in our house quite a bit. So I'll use that as my last swear word and one of my favorites. How about that? All right. Well, I am going to kick us off. We're going to talk about mortgage eventually, I promise. Yes, Rob.
Let me just say this about that briefly.
Okay.
So when my kids were growing up, I told them, look, I don't swear much. You're going to hear swearing all the time on the playground, from parents in the stands, whatever. You're going to hear it the rest of your life, but I don't want to hear it from you. And so it's interesting. I'm not, there's a lot of humor out there that doesn't have swearing in it. Usually, I'd say 99.9% of the jokes or humor or videos that I put in my commentary don't have swearing. But I have a great collection of jokes with bad words. If anybody wants them, shoot me an email. No, don't shoot me an email, please. Ask me for that. Anyway, let's talk about what Jim does for a living and what we're supposed to be here talking about, rather than Bob Hamilton stealing the last Diet Coke out of that bin that time.
I know that was impactful. We'll move us on to mortgage. Hello, everybody. I'm Melissa Langdale. I'm the president and COO of the Mortgage Collaborative. We are really excited that you are here with us. Apparently, I can't talk today, but we're excited that you guys are here with us. We do have a bunch of fun mortgage-related things to talk about, as well as some general leadership things we're going to talk about today. And to help us to have that conversation, we have a very special guest, Jim Paolino. Did I say that right?
You did.
I felt like I did not. Okay. With LodeStar, he is the CEO and co-founder of LodeStar and one of our newest preferred partners. And so we're very excited to have you on board with us today and having some really good discussions around what leadership looks like and how to navigate this market.
Yep. Thanks so much for having me, Melissa and Rob.
Absolutely. Rob's got his hand raised again.
Jim.
Yes.
The questions are flooding in on my phone via text.
Okay.
Sure.
Ask Jim what that photo is behind you on the wall.
Come on, I'm in Philadelphia. Everyone should know what that is.
Okay. All right.
Yeah.
Just check.
Thank you,
Right.
Jermaine.
It's Rocky.
It's Rocky. Come on. Yeah.
Everybody
All
else says that.
Okay. There we go. Thank you for clarifying that.
And it's I appreciate it though. Great way to start. I may have to quote the quote from the Rocky statue when we're talking about leadership in a little bit.
Oh, I like it.
Look at Ira piling on. You know what, Ira? I was going to leave you alone in this session, but you've taken off the gloves.
Yeah, and Femi is not wrong.
Ira's throwing virtual F-bombs. It is what it is. All right. Well, we're going to kick things off. And Jim, why don't you spend some time telling us about LodeStar? I know not everybody here might know what you guys do, and so it would be a good opportunity for everybody to have at least a level set of what you guys offer.
Yeah, absolutely. So LodeStar, I founded LodeStar with our co-founder 11 years ago. We're the fee expert. So we provide guaranteed closing cost estimates to lenders all throughout the country, primarily to disclose on the loan estimate form. And I stumbled into this industry like many people. I grew up in a family-owned title company. I, back in 2009, actually coded a good faith estimate calculator for them when I was still in college. Then around 2013, I saw kind of trade and some other things happening in the industry. I said, oh, I can start a business. How hard is this going to be? Very hard. I then went and proceeded to make every small business mistake imaginable over the last 11 years. And slowly we've been able to pivot to a market fit that really works, which is all we do is closing costs. We provide guaranteed data throughout the country to 230 plus lenders, right in their LOS platforms. We're integrated with systems that the majority of the market use. Proud member of TMC now over the years, so just really happy to help folks with this very unique problem in the industry, but one that can be very costly too. Everyone has probably had a loan where they missed some sort of fee and had to pay $3,000 because they don't know there was a mansion tax in New Jersey or other regional thing that comes up. So definitely important in this market. I see
Those
Ron.
tax beats will come back to get you for sure. All right, Rob's got his hand up again.
Yeah, two things. First of all, Melissa, I'm sorry. Earlier, I was going to ask you about. You said you had the talk with your 13-year-old.
Oh, bless.
About.
We're not going to go down that road.
Oh, you didn't want to talk about what they told you? No.
No.
So anyway, so that aside, I remember when Robbie filled me in on the birds and beads. So, it's something we all go through. But Jim, I wanted to ask you, data has value. And if you like, people will occasionally ask me, hey, will you sell me your, constant contact distribution list? And I will always say no to that.
Right.
But there is value in data. Fannie Mae puts out reports based on, their loan performance, or MERS could put out information, or ICE can put out information. Do you, and you're looking at closing cost fees across the nation. I mean, do you do anything with that data? And if so, what?
Yeah, that's a good question. There's probably a lot more we could do than we do, to be frank about it. The information we look at is probably a lot more with the inputs. We've been putting out quarterly information on the average home price throughout the country. So where is the home price raising? What counties, what states is it raising higher or lower than others? So that's the interesting data that we have. Part of our agreement with clients is we don't take in any PII, so we're not really tracking any private information there, but there is stuff to glean about it, of the balance of refis versus purchases in the market. Where are home prices going? Are home prices going down? No. So just information like that is what we've been able to glean and find interesting.
But if somebody asked you what states have the highest closing cost on average, or what states have the lowest, you would be able to probably figure that out, right?
Yeah, absolutely. I think New York and Pennsylvania are pretty high that come to mind regarding closing costs. Iowa, I think title insurance is technically illegal, so that's probably on the lower end. But there's a lot more, aside from that. And that's definitely information that we know and track. But honestly, it's I think the more interesting applications of what we do is, where is that data important and when is that important in the transaction? And one of the trends that we are seeing is, starting out, everyone didn't want to pay cures. So they want to quote fees on the loan estimate. So that way they satisfy the 10% tolerance, or being exact on transfer taxes, and that's it. What we're finding now is people want to have fees and accurate closing costs much further in, much earlier in the process. So point of sale integrations, even pre-application in some cases, because the more information they can give faster to a consumer, the more likely they feel that they're able to, really optimize that borrower experience and hopefully get that loan.
Yeah, I mean, that's the biggest thing people are looking for right now, right? Especially early in the process.
Yeah.
I've spoken to a couple of loan officers. I know a few are on here, like Audrey Boysono's on here, about for example, homeowners insurance, and how that cost has escalated, and that loan officers, even though a loan officer might not be trained in homeowners insurance, it's a conversation topic because it impacts affordability. And a loan officer like Audrey, the veteran loan officers out there will step in and say, okay, well, this is our rate, but let's look at the whole picture. And have you thought about insuring this home nestled in the redwoods in California, or nestled in the Sierra foothill, which right now we're getting dumped on, but in the summer, fires range far and wide. And so the loan officers find themselves talking about homeowners insurance because it has increased, and obviously closing costs enter into that. And, what constitutes a closing cost and what people can expect is very, very important. So I would imagine you're right there in the cutting edge of all of that information.
Yep, exactly. I mean, homeowners insurance is something we only deal with a little bit, but you have your fees from the municipality, the state, your transfer taxes, your mortgage taxes, your deed taxes, title insurance. I would put in the same category as homeowners, and that loan officers probably have to talk about it, but often don't have the best understanding, or maybe, in some cases, hey, what's an owner's policy? What's a lender's policy? So I think that's, where loan officers have the opportunity to really be that advisor to the borrowers they're going through all of these things, because it's very complicated.
One of my favorite questions to ask people, Jim, is,
Mm.
if you had unlimited resources, I could only fix one thing in the mortgage industry, where would you start? But we already know where you would start, because, you've obviously found the solution, and found a niche in it. But why closing cost calculator? Like, why did
Yeah.
you decide to start in that space?
Honestly, I kind of just stumbled into it. Was the initial start back, in 2009. Uh, the area, I think we addressed a little bit of what I would consider as the biggest area, which is the lack of understanding of the borrower. Not sure if Rob is aware of this stat, but what percentage of borrowers go with the first lender that they talk to?
Oh, I would guess it would be really small. Rob, do you have a guess?
Well, unfortunately, as Jim, you'll find this out 30 or 40 or 50 years from now when you become
Sure.
my age. You start to forget things. And I've heard this stat, and it's always amazes me, and then I always forget it.
Yeah. So it's
So
70%. 70% of borrowers end up going with the first loan lender that they talk to. I actually heard on a podcast I did with Accelerate and Josh Friend that 70% of borrowers go with the first place they submit an application. That's not a good thing in my opinion, right? That means that the process it's in some cases so painful that only 1 out of 4 borrowers want to shop around or feel like they should shop around. So I think that I know a lot of friends, I'm a millennial. I know a lot of people buying homes, masters in finance, have no idea about the home buying process. So I think that consumer education and actually understanding what the process is, why it works the way it does, what all of these different services and values are, is really, really important. We touch on a little part of it by providing clarity around closing costs, but I think that borrower understanding gap is probably the largest thing. There's a lot of things that the industry is trying to do to make people shop mortgages. I don't know, in the experience of the people on this call, how many borrowers you work with actually do end up shopping. I'd love to see
I'm
that in the
curious
industry.
how that stat has changed over time.
Mhm.
Like, I almost wonder if it's like gone up recently because there's an extra level of transparency,
Yeah.
or if vice versa, that it has taken the opposite effect, and people used to have more um, that they would only go to whoever they were referred to, and that was like their guy. So I don't know. I got to do a little bit of research on that to find out.
Mhm.
Um,
the
it's
the the whole and we're getting off the topic here a little bit, but the whole subject of consumer behavior and
Mhm.
why people buy certain things. Um, the other day, I went into the store to buy a can of tomatoes. Well, if you look at the canned tomato section in your supermarket, do it next time. I mean, it's immense. I mean, there's all kinds of cuts, all kinds of flavorings, all kinds of everything. Look at the cereal aisle. I mean,
Yeah.
cereal's like this whole thing. And obviously companies fight over either eye level for adults or cart level for kids.
Mhm.
And that is prime cereal territory. But I mean, all the time you might drive by 4 gas stations on 4 corners of an intersection,
Right.
and some gas station might be charging 20 or 30 cents more per gallon of gas than somebody else, and yet there are people buying gas at that gas station for whatever reason. Maybe they've
Yeah.
got that credit card, or maybe they just happen to be going in that direction, or maybe it's because their parents bought that gasoline. And
Mhm.
so closing costs I mean, Jim, can a borrower or a loan officer even shop for closing costs or title insurance fees, or is it just pretty much they're gonna take what you give them?
It depends. I think ultimately the borrower is just not really the one who picks title insurance in most cases. In a refi, a lender is going to determine that, and in a purchase, it's probably going to be the realtor, or in some cases the seller, depending on the state. But I just don't think borrowers know enough to do that at the end of the day, which is my bigger point, is half the time they're coming to the table and they don't know what title insurance is or why they need it. Never mind, I can actually shop for this.
Yep. Yeah. Um,
Wasn't blockchain going to revolutionize the, oh, you're grinning.
Mhm.
Tell us about blockchain. What happened to blockchain?
Probably the cryptocurrency collapse, but I think I think a really good example you're seeing some now of people outside this industry applying new technologies to the industry that they think is going to totally disrupt it. Blockchain was that for a little while of, hey, let's put all of these property records on the blockchain. You don't need title insurance anymore.
yeah.
Sure. Great. It could be an application that makes sense. The only problem is this is such a fragmented industry. In some cases, especially when you're looking at recorder of deeds offices, they're not even still in the 20th century, they're in the 19th century with paper records and other things like that. So trying to get them on the blockchain, it's just something that doesn't necessarily make a lot of sense without understanding what it happens. And it's all well and good to have immutable record, like a chain of title, right? That was the idea of let's have an unbroken blockchain chain of title. What if someone makes an error, right? As inevitably happens with people. What if you get something incorrect in there or fraudulent? Now, how are you going to update and change that? So it was just always an imperfect solution in my mind, and it was kind of the shiny ball technology of the moment. Of oh, this is a great application for this, and I I don't think it's an application that's necessarily going to make sense. I think this is also an industry that even though the technology has been there to do something like a digital closing for probably 20 years, it's very, very slow to adopt because of the fragmentation, because of the um, overall compliance and things like that are there. So I think a lot of people come in thinking that they can totally change something in this space, and without really being embedded in it like this group here, it's tough to go and just say, hey, this is going to change everything. You guys don't know what you're doing. And those are the folks that usually get kicked in the teeth a little bit.
Yeah. To your point, the same thing has happened or is happening with remote online notarization. I mean, you could
Yeah.
have a money manager in Tokyo who will accept loans with that in their pool that they buy. You could have Fannie Mae accept, you could have Freddie Mac accept, you could
Mhm.
have AmeriHome, Penny Mac. But
Right.
if Edna down at the county recorder's office in, Moose Springs, Montana
Mhm.
doesn't like it, or the county doesn't like it,
Yeah.
you're out of luck,
Mhm.
right?
Yep.
So
And now you're seeing that with AI, right? That's a new technology. AI underwriting, AI loan officers, AI everything. We'll see where that all settles.
Well, I don't know that AI is going to settle. This is it's evolving so fast.
Mhm.
I think, a lot of the lenders that I talk with are, they're looking at use cases for it, but are still very nervous about what all of that means, right? The risk associated with it, the way to really
Mhm.
leverage it the right way up front. Um, I mean, everything from can I really use it as a scenario desk, right?
Right.
Um, to, how do I pre-craft, scripting for my LOs to use
Yeah.
for customers, right? I mean, both of those have different risk. And so, there's all sorts of, challenges that I think we're going to see evolve
Absolutely.
over time.
Mhm.
Yeah.
AI realtors, I missed that. Yeah. And I think another point, Melissa, to what you were saying was what data are you putting into this and where is it going? In order to do underwriting, you're sharing a lot of information that you may not know where that ends up going. So that's really important with any technology to figure out what data are you putting in.
Yeah.
I can do that.
Yeah, I want to take us in a little bit of a different direction. I know I mentioned at the beginning that we were going to talk about leadership a little bit.
Mhm.
Obviously co-founding and leading a startup technology company in the
Mhm.
mortgage industry is obviously a challenge.
Mhm.
But it's not unlike some of the challenges that our market are going through right now. And so would love to just, pick your brain a little bit on what are some of the top kind of leadership lessons over the
Mhm.
last kind of 10 years that you've been
Yeah,
kind of building all of this out,
sure.
that you can share that may help leaders and lenders kind of
Yeah.
navigate the market that we're in.
Sure. Well, I have a short answer and a long answer. My short answer is clarity and being transparent because the anyone you deal with, any employee, they read the news, they know what's happening in the industry, they completely understand. So not acknowledging everything is worse than being upfront. So being upfront about what's happening, the effects on the business, understanding that, being very clear about that is important. And I know a lot of leaders, a lot of executives are always nervous to share information about their company, financial information. And I remember, I think it was the beginning of 2023. Every month we have a Zoom call. We're mostly remote. We have a company-wide call, and I always share our year-over-year growth number as it goes throughout the year. And I knew January 2023 it was going to be a negative number year over year. Absolutely. And I thought for a second, should I not share that anymore? I was like, no, I've been sharing this for a year. I've been doing this. I've been making a point to do that. So that was something that I did. And I provided context of we expected this to be negative year over year. We're going to end up growing year ultimately by the end of this year. But this number is going to be negative now because of what's happened in the industry. And I think that's alleviated a lot of things when people see, oh, this is our plan, this is what we're doing, and this is how we're addressing it. And one of the things I was proudest of is we had no layoffs over the last couple of years in our market. We're fortunate that we're small and lean and able to do that. But that was something that I take very seriously growing up in this industry and kind of seeing those ups and downs. That was my short answer. So I don't want to say my longer one necessarily, but
I love
Yeah.
it.
mhm.
Yeah, it's been a tough situation. So hats off to you, Jim. I'm self-employed, single employee. I'm waiting to get laid off any day now.
Yeah. I
Yeah,
always hear,
things
Rob,
are slow.
that's the worst job to have because your boss is a sociopath.
Oh, that's just the least of it, Jim. Trust me.
Oh my
Anyway.
God.
Yeah.
All right, we're going a little bit off the rails. I'm gonna try to reel us
Oh,
back.
off the rails. Melissa, when were you
Not even
talking
close.
about the
I'm
sex
not
talk
sure.
with your 13-year-old? Was that
Yeah.
on the rails?
That was totally off the rails. I was like literally trying to block that moment out. All right. Can well, I'm just gonna try to
I
reel
think
us back.
is that going to be one of the breakout sessions in Louisville?
Stop. No, it's not. We have so many amazing breakout sessions in Louisville, none of which are about that.
Well, next time.
All right, we'll see. All right. So, obviously, technologies, I'm going to get us back to technology solutions.
Come back to mortgages, Melissa.
Either way.
Yep, I'm trying.
Come back.
Technology solutions can obviously offer, fantastic solutions for
Mhm.
lenders trying to look for ways to save money, create
Yeah.
operational efficiencies,
Mhm.
increase capacity for their teams, all of
Mhm.
those sort of things. But it requires a ton of change management
Mhm.
to really, look at launching a process and a new kind of process the right way. How are you guiding lenders through that today? And
Yeah.
obviously, particularly, like, your solution is dependent on, in some cases, depending on the loan officer or depending on a
Right.
disclosure desk to go in and and leverage your
Yeah.
platform. How are you helping them to navigate that
Yeah.
change?
Oh, it's a great question. I saw a quote recently by Bill Gates. It's adding technology to an inefficient organization will make it more inefficient, and adding technology to an efficient organization will make it more efficient. So a lot of it is just seeing how lenders are implementing things. Honestly, the worst type of prospect that we get is one that says, "Let me sign with you guys. I don't need a demo." That will fail 9 times out of 10 because they have no expectations around what we do, how we implement, how things work out, right? So I'm always impressed when lenders are very thorough with their process, have designated testers. Ultimately, it comes down to paying attention to how things connect because a software that can do something really, really cool might not really make sense if it doesn't play nice with everything else. So I think the companies that do a really good job with it make sure it connects with everything else. Our team does a great job helping with that. we have designated account reps. We make sure that the data we put into the system plays nice with everything you already have set up. So there's no issues when you're mapping fees. We're able to pull anything in your system into default fees, or we know if, hey, this is a condo, we're adding a condo endorsement. So there's all sorts of little automations that we can do to make it better, and really play nice and minimize that click. Now we're moving to more automation, where you can almost have lights out integrations with this, or just be really effective with how quickly those are doing to really lock down the amount of button pressing to make it easier for a loan officer or a disclosure desk or whoever happens to be using that. And one thing that I do find interesting to end on is many cases we're just replacing a manual process still. And I think there are a lot of folks in that position with, where you have a manual process, then you're looking to automate that. That's almost easier than sometimes when someone's switching from a given vendor, but I think it's important to keep in mind that most times, the status quo, the manual process is actually what you're looking to replace, not another software.
Just have to make sure it's the right manual process that you're trying to replace.
Yeah, exactly.
Yep, I love it.
Mhm.
All right, we have time for one more question. I'm a little nervous to ask you, Rob, but do you
No,
want to finish?
no, no, no. I received another text. I received another text for me to ask Jim, what are the two photos underneath the Rocky photo on the wall behind you?
Well, first off, I wasn't able to say the Rocky quote about leadership in tough times, which is, it doesn't matter how hard you hit, it's how hard you get hit and keep on moving forward. That's how you win. For those of you who know, that's actually on the Rocky statue, although I think it's from Rocky Balboa. It's not from one of the major Rocky movies, but still a great quote. Behind that, I have Darth Vader saying, "I find your lack of faith disturbing." Under that, I have Michael Scott from The Office saying, "You miss 100% of the shots that you don't take," which was a Wayne Gretzky quote that he did. And then actually below that is, this is fitting because Dune came out today. That's actually a quote from Dune, for those of you familiar with the book, The Litany Against Fear, which is a big part of the ethos of Dune. And since we're doing the tour here on the other side, I actually have my wall of family businesses. So I grew up in a family where entrepreneurship was very much normalized. All four of my great grandfathers ran some sort of business. So during COVID, I slowly collected different mementos of each: construction company, auto dealership, a gas station, family-owned title company, insurance companies. So I collect all of those, all of that, and have it behind me. And for me, it's a reminder of, you're doing this ultimately to create jobs. So anyone here running an organization, whether you started it or not, what you're able to do is create jobs for people. And that's really, really important. And one of the best things that you're able to do for the economy and for folks. So, I take that really seriously. That's why I mentioned no layoffs is something that's really important as an effective manager. So this is my constant reminder of that. So the fun ones are on that side, and the sentimental ones are on the other side.
No, that's great. On my wall, I've just got some sad-eyed Italian children and dogs playing poker. So that's a great wall to have on your behind you there on the wall.
Mm-hmm. Yeah.
Love it. All right, guys. Well, we are all up at time. Jim, thank you so much for joining us and sharing your insights with us, leadership lessons. Loved hearing about your story and love what you guys are building. Super excited about having you guys in the TMC family and seeing you guys in Louisville. And I hope everybody has a fantastic weekend, and we will see you right here next week. Bye, everybody.
Thank you. Thank you, Jim. Thanks, Melissa.